I've just watched the most open-minded, educational, helpful video on Bitcoin that CNBC Squawk Box has ever made. Let me set this clip up. So the CNBC anchors, they bring on guest Tom Lee to discuss the recent news that Tim Draper has just reaffirmed his $250,000 Bitcoin prediction by 2022. Now, what I'm most impressed on in this video is not the prediction itself, and it is not what Tom Lee has to say. What I'm most impressed on in this video are the CNBC anchors chiming in with their knowledge. This is knowledge that one can only gain if you have perspective. And these guys clearly have more perspective than I've ever seen them. And I'm not even saying that, they get it. I'm just saying that they're coming at this pretty open-minded. You're going to see what I mean. You can't understand how far we've come with this clip until you understand where we've been. So before we get to this, let's watch a short clip of CNBC anchors from 6 years ago. This is back in 2013. We're going to watch this, and then we're going to compare the two clips. Check this out.
Bitcoin is an electronic online digital currency, was created about 3 years ago, kind of flew under the radar. Now it's starting to actually gain some traction. Where are these things accepted? Still not a lot of places. I checked out online, not a lot of websites that you would recognize, but the places are kind of novelty clothing, gaming sites, yeah, wait for it, porn, some of those places. But, there are a lot of drawbacks, there are a lot of fears that I'm sure that our guests are going to talk about, but this tells you how really insecure people are in this age of debt and currency crises and all the other things that we have going on in the world.
First, I have to give Bitcoin creators credit. At least they know enough not to trust fiat money that's controlled by our government. But they're trying to reinvent the wheel, and they've come up with a flat tire. We already have a perfect, real form of money, and it's called gold. Money has to have 4 elements. It has to be very rare, indestructible, divisible without losing its purchasing power, and cannot be increased by fiat. And Bitcoins fail on the first 2. They are not rare, and they are very much destructible.
Yeah, you guys, I guess one of my concerns here too is that, there's a lot of stories about drug dealers using these kind of things, and I think it's just a matter of it's not regulated, it's not controlled.
The whole Bitcoin market is about $1 billion. It's a novelty for the geek squad. I can assure you, if these became well promulgated, then the U.S. government would shut it down.
And just to give our viewers some perspective, there's about $4 trillion in currency trading every day, and as Michael said, it's about $1 billion worth of Bitcoins.
Isn't that nice? CNBC taking the time educating us like that in 2013. Things have changed just a little bit, at least today. So let's watch this clip from just a few days ago, and I want you to notice 3 things about this clip. Number 1, the mainstream media now references Bitcoin's 11-year history. That's pretty big. Number 2, Bitcoin is being seen as digital gold. That's really nothing new. And number 3, and this is the most significant for me, CNBC anchors now have a greater understanding of what Bitcoin is. And more than that, they're open-minded to the whole thing. So see for yourself. This video starts off with them talking about Tim Draper's prediction.
Longtime venture capitalist Tim Draper doubling down on his prediction today that Bitcoin prices could hit $250,000 each in the next 2 years. Brian Kelly's at the Plaza. And I got to be honest with you, Brian, when the producers, we talked about this earlier today, I said, I don't know if we should talk about it because I felt like it was so bold, it's almost irresponsible. But he's a well-known guy. Yep. He's not going to say anything he doesn't believe. So we went ahead and did this. I mean, is there anything that you're seeing that could make this bizarro prediction happen?
So, yeah, you know what? It sounds bizarro, but it wouldn't be out of the realm of what Bitcoin has done in the past. And so that's why I wanted to bring up this chart. The chart we have here is a log chart of Bitcoin since 2013. And as Carter Worth will say, the lines draw themselves, but you have this channel going all the way back to 2013, and it's traded nicely in that. Now look at this. If you go all the way out here to the top of this channel here, that's about 200,000, 250,000. So if Bitcoin just stayed in this pattern, and this is normal analysis that people do on all asset classes, if it just stayed in that channel, the top of that channel is around 200, 250,000. So that's the technicals behind it. The fundamentals, let's call it, is that if Bitcoin were at 250,000, that'd be about a $4.5 trillion market cap, which would be about half the market cap of all the gold in the world. And so I think Tim Draper thinks, and I certainly have some of this view, is that Bitcoin is going to take market share from gold. So if you think over the next 2 years it could take 50% of that market share, then that prediction isn't too far out of whack.
All right, so Tom, you've been obviously bullish on Bitcoin. I mean, and again, I'm not disrespecting Tim Draper at all. He's obviously an incredibly smart and successful guy, but is this one of those headlines you put out just to get news, or do you really believe this is something that can happen? Not you, but him.
I mean, I kind of agree with Brian. You know, when you look at this on a log basis, the idea that Bitcoin would get there would be consistent with the idea it's a generational trade. I don't know if 24 months is how long it would take, unless it would take 5 years. But if it took 5 years, I think it'd still be considered a huge, massive, surprising success.
200. Anybody?
Here's I think the point these guys are making. I would put it in different terms for a guy that's not in the Bitcoin market every day. The volatility you see in this asset class is so extraordinary that it's still been a great year for Bitcoin despite this pullback.
It's double.
People that have been playing in this asset class from the beginning are used to these kinds of moves up and down and are not running for the door, or at least not the dedicated folks. There's been a lot of folks that have run into this asset class and have run for the door, and I think that's probably the message in here.
I mean, let's not forget, Bitcoin was basically worth a penny for the first couple years of its existence. I mean, so it's had these incredible runs.
I think that's the point. It's not unusual for this asset class to move that much. Whether it gets there, we don't have any idea. But it's not unusual to see it. I mean,
my beef with the call is not that I don't think that Bitcoin has value. It's that I wonder if that move down from 20,000 back down has just scared off, to Tim's point, so many potential buyers of the asset class.
I think it has, but I think we're probably washed out, right? And listen, you don't need to have a $250,000 price target to still do well in Bitcoin. If it went to 14,000, you'd double your money. I'd be very happy with that.
Yeah, if I was 8 feet tall, I might be in the NBA. I mean, if Wood could, right?
I don't know if he would.
Well, it was at.
I'm actually the world's worst basketball player.
Actually, but here's the point. It was at 14,000 this year. Right, so that is not that unusual. It was at 13.9 earlier this year. So again, these moves are extraordinary, but not unusual.
You know, Mark Husko, Morgan Creek, well-known guy to this show, and Melissa and everybody. And I'm going to. He might be watching. If I screw up your stat, Mark, I apologize.
Of course he'll screw
His whole point on, and he's a wealth management guy and a hedge fund guy. His whole point is, if you just had 1 or 2% of your portfolio in Bitcoin, just 1 or 2%, you would have increased your gains. And again, I'm screwing up the numbers. By a couple of percent a year. So you substitute 1 or 2% from some other asset class, and you would have increased your overall returns very nicely.
Well, it seems to me like we're making progress. They're asking the right questions. They're thinking about the right things. In my opinion, you can see the progress that they're making. I also liked what that one guy said at the end. He referenced, he's making the arguments now. Usually it's me making the arguments or you making the arguments. Now CNBC anchors are making the arguments. And this guy right here referenced when Mark Yusko came on talking about, he's the CEO of Morgan Creek, talked about how people are going to, eventually put 1% or 2% into Bitcoin because it just has such a great history for return on investment. It's going to be irresponsible not to. And the reason they will is something that Anthony Pompliano brings up. Is that it's because Bitcoin is an asymmetrical asset. Now, what does that mean? Well, if it was a symmetrical asset, that would mean if I put $1,000 in, well, I risk losing $1,000 and maybe I risk gaining $1,000. But if that's a symmetrical, but if it's an asymmetrical asset, if I put $1,000 in, like Bitcoin, well, I could lose $1,000, or I could possibly, 20x my $1,000, have $20,000 or whatever. That's an asymmetrical asset. And that is what I think we will, the arguments people will understand when it comes to Bitcoin. Taking a look at the price, $7,129, kind of forming a little bull flag right here. Keep an eye on that. Then I guess we'll finish up today's video by taking a look at our Twitter. I showed you the other day, we tweeted this out. Sorry, Moon Boys, Bitcoin has no chance of making a new all-time high until next decade. Fooled a lot of people. A lot of people liked it. A lot of people retweeted it. Besides that, U.S. Democratic debates were last night. I don't know if you watched, but I challenged Politico. I tweeted at them. I say, you don't have the guts to ask the candidates if they bought the dip. They didn't have the guts. This is pretty good. This is my bag of Bitcoin as global QE devalues all fiat. This is me. All right. And yeah, that's it. That's it for me, my friends. This is Aaron at Altcoin Daily, and I will see you tomorrow.